ladies and gentlemen, welcome back to another exciting episode of the Breaking Bitcoin Market Update. As always, brought to you by your host, Justin Wise. I am the lead analyst and senior mentor at CrackingCryptocurrency.com. Today is September 23rd, 2022, foul year of our Lord's, mixed day from the market. Some things pumping, some things dumping. Happy Friday, everybody. We made it. I didn't think we were going to get here, what with everything that kind of went on this week. I mean, for the love of God, we've got the fallout from the Ethereum merge, Bitcoin coming down towards support, stock market tanking, FOMC meeting. But we made it. We made it. All right. So not a whole lot of updates this morning. We're going to get right into the charts and start breaking everything down. Let me get everything pulled up here properly and we'll get going. As always, we're very proud to host the fastest online community, fastest growing online community, that is, of active cryptocurrency investors and traders. Make sure to join our free Discord. Link, as always, is in the description. And if you'd like to support what we're doing here, make sure to tap the thumbs up button and the subscribe if you haven't already. Let's rock. All right. Hopefully everybody's doing fine on this wonderful Friday. Again, not extremely beautiful price action. In today's episode, we're going to be covering a few things. We're going to be covering something that you need to know about trading on derivatives. Doesn't matter what platform you trade on. It's just an aspect of derivatives. So we're going to be going over that, i.e. how not to get stopped out when you degen a position. Secondly, we're going to be going over some updates here to EGLD, Elron. Nothing major as far as that update goes. Big update for Helium as they are migrating officially to the Solana blockchain. And probably the biggest news of the day, and something as a founder that I always think about, we do have new news coming out from the CFTC as they reached a recent settlement with a decentralized autonomous organization and BZX. So definitely considering that. Alex81SG has a great point considering that the S&P 500 and the NASDAQ are back at the June lows. Crypto's been holding up better than I expected. So Bitcoin is down like, what is Bitcoin down today? Bitcoin's down 2.56% today. And the QQQ is down over 4%. So it does kind of go to show you right here how valuable investors do believe this a sub $20,000 level is. We are still seeing a lot of absorption, and we'll see that in the charts when we go to it. But as we sit down here at the lows, Diet Coke, shout out, not sponsored, but willing. Hit me up. All right. As we sit down here at the lows, again, as I said yesterday, when we are in a range, as we've been trading in a range, you always assume that we're in a range. You adopt a range strategy. You buy low, you sell high until you revert back into trend forming status. And one of the kind of criticisms that I got for my comments yesterday about my overall analysis and idea of trading strategy is that, well, Justin, you never know when you're in a range and you never know when you're trending. And that is an argument that I have heard many, many times in my trading career. It's an argument I've had many times in my trading career. And, you know, I'm at the point in my life that, you know, arguing is pretty pointless, you know, agree to disagree, whatever. And the reality of the situation is, yes, sometimes it can be difficult to identify a range. Sometimes it can be difficult to identify a trend. But what you will learn as you improve your skills in trading and just as you get more experience is you will be able to begin analyzing that and applying some objective rationale to it. Have we had multiple tests of support and resistance? What does the volume profile suggest? What are our moving averages doing? Are they very close together or are they very far apart? Are they moving sideways or are they moving in a dominant direction? Has price been underneath our moving averages for a long time or above our moving averages for a long time? What are our momentum oscillators doing? All of this data, what is open interest doing? What is volume doing? All of this data comes together to give you an idea of whether we are trending or whether we are in a range, if you have difficulty identifying such an aspect with your eyesight. And it can be challenging and difficult sometimes, but it's not impossible. And the reality is, even when it's not impossible, and even when you have a modicum of success, or even when you're very successfully switching your strategy between range and trend, you're always going to have losses. You're always going to analyze wrong. You're always going to enter into a wrong position, and that's fine. That is what our risk management and position sizing aspect of our strategy is there to do. It is there to protect you when you are wrong, because you will invariably always be wrong at some point. So with that out of the way, as far as I'm concerned, we are trading in a range. As we approach the bottom of the range, we accumulate long positions. As we approach the top of the range, we close our long positions and accumulate short positions as we have been doing. So what are we doing now? All right. Bitcoin is trading down at the bottom of the range. If we consolidate sideways here at the bottom of the range, we do want to start getting our shorting boots ready, just in case we do have a market breakdown. I am not of the opinion in this particular situation right now, if we run down here and grab liquidity beneath these market lows right here, I will be trading the breakdown. I will not be trading the liquidity grab reversal. And the reason why is because you really want to be mega careful doing that. And again, you know, I'm a human, you know, and I can only trade or think based on my past experiences and what I know and what I assume to be true. And I lived through the 2018 bear market, part of the 2015 bear market, and certainly the 2021 downside and 2020 downside too as well. And yeah, the downside potential, I've said this many times. When you're trading, the first and foremost thing on your thought is capital management. How can I avoid being long all the way through something like this? That is more important than being long through all of this, for example. You want to preserve the capital that you have, particularly when we are in the midst of an overall bearish trend. Shout outs to Mr. H. Welcome to the chat, my friend. You want to protect yourself from that downside before you want to consider all the dollars that you can make by moving up. So essentially what we want to be very, very aware of, and you can do this with Bollinger Bands is probably a good way to do it. I like to do this with the volume profile. And I have talked about this a lot, this setting of the developing value area. So we're just going to select our range here. Okay. So hopefully you can see that, and I'm going to make those lines just a little bit thicker so that they're easier to see. Developing value area is a fantastic tool. I use this on lower time frames all the time, and it lets me know anyways, with pretty good accuracy, whether price is actually going to be breaking out, where I should be concerned when price reaches, and where I should be potentially setting stop losses and take profits based on these values. So the value area simply captures where the 70% range of the volume profile is, okay? And lets you know it's called the value area. It's the developing value area. Again, if you missed that, you can just access this setting by opening up VRVP. It's volume visible range volume profile, going over to the style tab, and enabling developing VA. That's developing value area. And of course, I did make it a little thicker down here because we like them thick around these parts. So EGIF. So as you can see here, as price approaches the upper range of the value area, you see it does get rejected. And again, you have correlation here with our moving averages, often with our baseline. On lower time frames, there are momentum oscillators reaching over bot periods of the market. And the value area just gives you a very good idea of where these upper boundaries and upper levels are. And as you can see, we have a value area right down here about 1760, okay? Now, if we go over to Glassnode, and we pull up my bear market mirage dashboard, BTC valuation models. Okay. So these are 3 different algorithms to attempt to compute a fair market value of Bitcoin. And what we've noticed is that historically in the past, these act as fantastic areas of support and resistance, even in regards to the delta price, which is this lowest purple line here, actually capturing the bottom wicks during Bitcoin bear market bottoms. So right now, we're currently trading under a very popular valuation model, Bitcoin's realized price. Below us, we do have Bitcoin's balance price, and that is currently sitting at $16,755.18, whereas our delta price is sitting at $13,257.67. All right. So we also have, as I've pointed out, we have a convergence of, well, a pretty close convergence of our balanced price and the difficulty regression model, which is an attempt to compute how much it costs miners to produce Bitcoin, including the costs of electricity. And we can see that actually Bitcoin's difficulty regression model has actually risen. It's currently sitting at, hold on a second, to the last metric here. It's currently sitting at $18,039, whereas our balance price again sitting at about that that high $16,000 level. So a couple things that are important there. Let's go back to our valuation model. Let's go back to that valuation model. There we go, 16,761. So our balanced price was up in the 17,000s there for quite a while. It's now down in the 16,000s. So that is a very reasonable area to expect to be acting as a potential downside price target. Again, we can assign a confidence interval to this, but again, when price begins moving to the downside, if price begins moving to the downside, if we do break our level of support, the areas that I think people are going to find a lot of liquidity at, going to be that 16,761 and further down 13,266. Now, if we do end up breaking down, if we go back to 2018, which was a pretty violent rejection, let's turn this off. And we're going to go back to 2018. Might take us a minute. Just hold your horses here, guys. Here we go. So here's the bull run. And here we go. We are trading throughout 2018. And here we go. So this is the area of the market that I'm concerned about. What I really don't want to see from Bitcoin's price is to move sideways in a very tight range with contracting volatility over the next few months leading into the end of the year, leading into November. Because that will really start to give me PTSD and really tickle my shorting feelers, if you would. But it's not a straight line down. Notice that we do have a very volatile move down, about 8.29%. I would actually expect us to have a larger move down if we were to break support in such a fashion and begin the movement to the downside. But it still takes, from the day of the breakdown, it still takes 31 days. It takes a full month for us to actually reach the bottom. So it's not going to be a straight line down, okay? And so I say that because if and when we do break support, you will likely miss the initial move if you're waiting for a confirmed breakout. But we have some time, right? We have some time to see price very clearly begin accepted. And that's why I was showing the value area. There's this concept in trading known as acceptance, okay? And this concept is used in conjunction with levels of support and resistance frequently. However, you can also apply it to the Bollinger Bands. And in this scenario, we're going to be applying it to our developing value area. So to show you what I mean more specifically, I want to show you an example of of okay. I want to show you an example of, is this right? I want to make sure. No, I don't think this is right. Here we go. Yeah. Okay, let's go to the 5 minute. Sorry, I was looking at the wrong. What up, puppy dog? Okay, here we go. Indicators. All right. Yeah, this is quite a good example. Okay. Okay. So here's a pretty good example right here. Notice that in this example, and I'm going to make here, let me make these lines thicker so it's easier for you to see. Okay. So notice in this example, price is going up, it's going down, it's doing things that prices do. And we have this value area, and note very carefully this example right here. If you look carefully, you can see, and actually we can just zoom in on that for you. Here, let me do that, but let me move my cursor so it's not in the way. There we go. All right, there we go. Excellent. All right, so you can see right here that price does break up outside of the value area, okay? But it very quickly comes back down inside. So that's something that you want to watch. There's this term, again, this concept is called acceptance. And acceptance is typically, I mean, you can kind of categorize it however you want to in your own personal trading. I like to see opens. I like to see price open and close above whatever metric I'm using. That could be the value area, which is what I prefer in my trading. It could be the Bollinger Bands. It could be a moving average. It could be a level of resistance. And then we're going to flip this example for prices moving down in the case that we're talking about a level of support. So this is not the most perfect example because you never find the most perfect examples in the market, because price does open and close for one candle and then violently sells back down into the value area. So that is a sign of a failed breakout, okay? And typically you would want to be closing your position out here. Now, granted, in this example, price does end up running out, but let's look at this example right here as a good one. Here we have price moving to the upside. We do trade. We're moving up on pretty high momentum, and we trade and we close this 5-minute bar above the value area. And you might be thinking to yourself, wow, this could be a breakout. Now, again, normally the way that you would use these indicators in a more basic trading aspect is simply using these in a range for a mean reversion strategy. So, i.e. price is trading in a range. Here we can see that on this candle, for example, price closes above the value area and then closes right back down inside. And right here, once we close back down inside, this is just like taking a short when the RSI goes over bought, and then you go short on the first candle where the RSI actually closes back down below the overbought level. So you're trying to catch a reversal trade, and you're trying to get in quite high. Here you have an example of that right here as well, where, oh, sorry, I don't think you guys can actually see this. Shoot. Oh, sorry about that. So the example I was talking about was this bar right here, and trading right back down inside and entering short right on this bar. Same thing here, price breaks above the value area, and then on this very next bar breaks down inside. Now, if you had entered a short here, you would have been in drawdown as price pumped back up. But if you would have placed your stop loss above this high, you would have been quite fine, and you would have been able to catch this, potentially this, if you were super savvy. And kind of the same thing here, price breaks above. We have an open and close, so potentially maybe you hold your position throughout this. I would be closing when we come back down inside the value area, and then just simply re-entering over here for the exact same thing. In this case, your rewarded price does go up. It pulls back down, stays above the value area. So a nice pullback entry there, and then goes back up. So this is what you'll see in a breakout. This is a lot of traders really like breakouts. I really like breakouts. So having a good breakout strategy and having a good mean reversion strategy and knowing what you want to see to switch between those two. So again, acceptance is when you see price hold itself above a level at which you wouldn't expect it to, i.e. a level of resistance, or the local market high, the developing value area. So when you see price breaking above or breaking below and holding below those levels, that is typically when you want to swing into a breakout position or a breakout trade. Now, again, you're going to have losses. You're not always going to be right. But knowing the difference between, oh, shoot, price just broke down below the value area, I should probably be looking for a long, because it's more likely to revert back to the mean than it is to trend. Price only trends about 20% of the time, ranges the other 80% of the time on average. So, okay, so taking that concept. Oh, and also here's this. Okay, so here's something. I'm just going to share a little bit of humility with you guys. So I put on a lot of trades yesterday, and it was a good day of trading. So, I was able to extract quite a bit of profit from the market yesterday. But I've been trading INJ quite a bit, and it was really late last night. I was up late doing some work, and I did something that I normally, I wouldn't say that I normally don't do, but on INJ, I had been trading with probably about, $10,000 position sizes. So, nothing huge, nothing major. But I had saw this price movement right here. Price had pumped, and we actually closed above the value area right here. And I entered into a short, okay? And I set my stop loss right above here because I'm just taking low risk, high frequency, like not high frequency like HFT trades, but just more frequent trades with smaller position sizes for my account. And, this is something, the reason I want to tell you guys this is because I want you guys to avoid this. So on INJ, it's not the most liquid, right? And so when I put in that $10,000 position size, I had been multitasking earlier in the day that there had been a lot more liquidity in the order books. But often what you'll find at night is that liquidity dries up as trading desks shut their bots off or traders, market makers leave the market or whatever. But liquidity dries up at night. And I had entered a $10,000 position, and that was one of the largest positions that had been traded in INJ for the last few hours. And so that made me a target, right? It's not that the market makers or whoever was on the opposite side of the trade I got targeted. It's not that they had access that I don't have access to. It's not like they're communicating with Bybit and Bybit told them that my stop loss was up there. That's not how it works. They were just simply able to see that a large position kind of out of nowhere had been entered into the books, and they were able to see that it was a short. And so they're able to suss out, okay, well, the liquidity is not very deep right now in INJ. And I was correct about the overall movement. It was this movement right here, right? It was this movement right here. This overall, I wanted to short INJ and catch this reversal. But price was pushed up. My liquidity was grabbed and then price reversed. It's very curious how often that happens sometimes, and will often happen for different reasons. But in this particular reason, it's because I was acting as a whale in a low liquid market at a time when not many people were trading, and I got targeted. My liquidity got grabbed. So the lesson here, the takeaway is this, right? How can you avoid situations like that? Pay attention to what the average trading size is and kind of just what's going on recently with the asset that you're trading. Watch the order flow. And if you use a lot of leverage to take on a very large position out of nowhere, and that's kind of not in line with what the other market participants are doing, then it is very likely that you're going to get targeted because they have a good guess that your stop loss is probably here. And if they push price up, they can fill a position size equal to the one you're going to close out with no slippage, get a limit order filled at the best price before the movement actually happens. So pay attention to volume. Pay attention to what's going on in the market. Don't be complacent. And journal your mistakes. And sometimes share them with friends because that's how we get better. Okay. Next. All right, we'll take a brief break here for a little bit of comedy. This is an old one, but this is an oldie but a goodie. So here we go. Kevin Svensson posted this on Twitter. This is crypto Twitter sentiment over the past few months. I'm sure many of us can believe or can sympathize with this. So let me just make sure everything is set up properly here. Nope, that's not right. Is it music? Huh, okay. I guess maybe there's no properties, game, and game. Maybe there's no music, but here we go. All right. Yeah, so that final part is where we find ourselves right now. That final part is where we find ourselves right now. Okay. All right. So again, just let me just not refer to, but just remind you guys of the overall kind of structuring of my positions right now. I've taken on quite a lot of options contracts all the way up until June of next year. These have been posted because we are providing our options trading signals to our premium members now. So we do have our trade our option signals channel, sorry, in the Discord. So we do have quite a bit of downside put protection to protect us in the event of downside. We're only holding 25% spot for the total Bitcoin allocation that we want, and we are prepared to buy at lower prices, 17, 13, and lower if that is the case, if that's what happens. We are taking futures risk here to the long side on multiple assets. And yeah. So relatively simple. So I think you guys want to be positioning appropriately and responsibly. It's a tricky area of the market. The good times are coming. And just take the high, that's the biggest thing to take away. Just take the high probability, high quality setups that come your way. Be patient. Let those high quality setups come to you. Don't chase gain. Don't chase yield right now. Just do what's doing well for you. Don't be trying to do additional things that aren't doing well for you. Okay. Bitcoin. Let's move into LTF analysis and see what's going on underneath the hood, as it were. Okay. Yeah, so here we are, 23rd, a little bit of a sell-off, starting to recover just a little bit off these, off the current low. Nice distribution or consolidation range here, but unfortunately, not a significant increase in volume or accumulation here. Logical turning around area, as we can see right here. We do have an influx of long liquidations here at the bottom, but it's not massively significant. The volume is high, of course, but we would like to see more long liquidations at the very bottom rather than on the way down is typically how we want to see that, as the very last tourists get liquidated. Let's see here. So on the sell-off, we can see open interest rising relatively dramatically. Let's see, that is an increase of almost 7.5% in open interest on the way down. And we can see from the cumulative volume delta that those were new shorts putting on positions. And as we sit right now, we can see that some shorts have begun to close out. Open interest is no longer rising. Open interest is consolidating here in this range. And buyers have, of course, stepped in throughout this range as we do CVD step up. So the way I would interpret that is obviously shorts began entering into positions on this downside movement. And on these lows, longs began laddering positions. Funding did hit very negative, so the shorts did get a little too aggressive here, which is why price is reversing. And although funding is still negative, it is only moderately so. So we're not necessarily out of the bulwark yet. Not too much to say here. Of course, we have formed a higher low. Again, we do see a big rise in open interest here, and we do know because of the CVD and open interest staying flat that the amount of longs that are being put on is relatively equal to the amount of shorts that have been closed out. But so far, we don't see a very large influx of fresh new open interest from the buy side. We did, of course, see that here, but almost all of that got closed out throughout here. So all the longs that entered into long positions here, as you can see from the rise in open interest, they closed out on the second leg of the journey up, as you can see from the same decline in open interest, bringing it right back down almost to the level at which it started. And then the shorts came in, and now the longs and the shorts are relatively equal as far as what has come on. Honestly, from a technical perspective and from a flow analysis, I don't see anything in here that gives me a lot of desire to enter into a position one way or the other. Alex81SG says, do you usually take your options through expiration or trade them over time? It depends, honestly. So what I do is I do check my options every day. I use a web scraper to actually give me alerts. Because I like to monitor the bid and the ask price on the options contracts that I trade. So I just set thresholds at which I would be at 50% profit if the bid. So if I'm long on a call, if the bid rises to being 50% profit, then I will I'll take half of my position off at that time. And if I ever reach 100% profit, then I just completely close out my position. That's just the way that I do it. And, speaking of which, Alex, since I got you here, I did misspeak, and I made this announcement in the members lounge, but just in case you didn't see it or anybody else watching, on FTX US derivatives, you have to trade out of your position. If you do not trade out of your position or if you do not trade out of your position before expiration, it will expire worthless. You will not, there's no automatic settlement. So, very important. I did misspeak when I said that that was not the case when we were talking about the fact that you have to manually give FTX US notice that you want to exercise your options contract. So do I usually take my options through expiration or trade them over time? I would certainly say that over the last few months of trading options, it has been through to expiration. But again, it just depends. There have been multiple opportunities there where we got a big spike in price, implied volatility spiked very high, and that put my options position or my options contract into profit, and I took my profit. So I think that's a good metric, 50% and 100%. And that's not price movement. That's P&L. All right. All right. Well, that's Bitcoin. So let's move on. Ethereum. Oh. What happens when your fingers are switched to the wrong side here? Okay. So same thing here. Let's look at Ethereum here. Get down into this range. Yeah. So why do I have that? Give me a second. Yeah, there it is. Yeah, that was weird. Okay, so here's Ethereum, and here's a beautiful example of that lesson that I was just talking about with confirmed breakouts. So notice here we've got this developing value area. The price of Ethereum breaks above it and trades right back down into it. Great opportunity to catch a reversal short. We tap the bottom of the value area on a doji candle. Great opportunity to get long. Boom. Exact same thing happens over here. Reversal down. Boom. Wick. Doji. Oh my God. Take it back up. And what happens here? We close strong above. The value area here, and then we continue going. That's a momentum long. That's a breakout trade, and you take it, and you take it, and you take it, and you gotta have a good oscillator here to catch this, or just watch volume. You're never gonna always catch the top. You want to try and catch this, and you want to try and catch this. So selling anywhere in here is a good idea. We get a nice pullback opportunity here. It goes up, doesn't go all the way. You're definitely going to lose money on this trade if you're trading daily bars. If you buy the pullback, because this down movement, if you're waiting for daily close, it's going to happen too quickly for you. Price does move back up, get some rejection for a little bit, pops up, goes for a little run. You can catch this on the hourly, plenty of profit on the hourly, and then back down. And we've been accepted back into the value area. So again, look at where our level of support is right now. Look what our point of control is, and look where the bottom value of the bottom threshold of our developing value area is. So all that to say, we've got a lot of convergence in this area right here. The distressing thing is that, see, with Bitcoin, relative to its level of support, its price is already down here, whereas Ethereum's all the way up here. So if we can expect this to act like a magnet for Ethereum, then that means that Bitcoin is going to potentially trade lower in lockstep with Ethereum, or vice versa, to make this market structure kind of sink. Now, of course, doesn't have to be like that. It can be completely independent, but that's just one thing to consider. If Ethereum does move down to test this lows, then that really does mean that Bitcoin has to move down lower below support. So either way, that's quite a bit of a ways for Ethereum to go, depending on which line it wants to tap. And so again, the point stands. Monitor the levels of support for Bitcoin. Watch for acceptance below those levels to potentially predict a trending movement or breakdown out of those levels to the downside. But overall, right now, again, I think for Bitcoin, the risk to reward down at the level of support is to the long side. And this would actually be an interesting opportunity to hedge with an Ethereum short. That would be cool. That would be neat. And then we can just look at the differences in funding. Well, you could even do it on futures and perhaps capture that as a basis trade. Let me look into that. All right. So, but anyways, long story short, we have been accepted back into the value area, which overall means back to range trading strategies, accumulate long positions as we approach the bottom level of this level, as we approach the bottom area of the value area, and accumulate short positions as we approach the top, and dump upon confirmed acceptance and breakouts of these levels. Looking at the lower time frame data for Ethereum, Yeah, honestly, nothing too crazy here. So here's this sell-off today, just as we see here. Again, we see the exact same thing. We see a rise in open interest and cumulative volume delta move down, indicating that shorts were getting aggressive and entering into positions on this movement to the downside. A lot of the shorts did end up closing their positions out right here as we see that big drop off in open interest. Actually, more positions closed out than opened up on this movement now. And open interest is beginning to move back up a little bit throughout this area. CVD is rising just a little bit gently, as is Bitcoin. Tentatively bullish, but again, overall, nothing fantastic. A lot of short liquidations just came in, and the funding rate is moderately positive, which is not too bad to see down here at the lows, because of course we did flip negative and the funding has flipped positive. So again, when you see funding flip at the top of a movement, usually a sign of a reversal. So again, we can see CVD on the rise and our funding rate flip positive. Again, the fact that open interest isn't rising dramatically is not does not make me super excited. But again, this is all tentatively bullish. So not bad, not bad. So Ethereum tentatively bullish, Bitcoin tentatively bullish, but I don't really have a strong opinion on it just based on the charts. But of course, they are likely going to move in lockstep. Looking at our altcoins of interest today. Nothing huge out of here. Like I said, I normally only like to really enter into these positions when we see something big like plus 80%, plus 90%, plus 100% increase in open interest. COTI, which we had taken some successful trades on earlier in the week, is close to 50%, but you know, kind of low, but probably some opportunity there. Definitely your best bet. Kronos USDT up 34%, Ethereum proof of work up 32%, ACH up 26%, Axie Infinity, Metal Gala, GTC Compound Theta. Yeah, so I would probably be eyeing for positions in COTI and maybe Kronos if I was looking for an altcoin position today for the day trades or for the very short-term time frame trades. Let's actually go take a gander at those and see if we can identify any opportunities. COTI USDT and Bybit perpetual contract. Getting some nice pumping out of COTI. Oh, dear Lord, look at that. Don't you love it when it hits your levels? Okay. So based on everything we just talked about, what should be our bias looking at this chart? Okay. What should likely be our bias looking at this chart? Okay. Couple things. First off, we can already see an example of a mini trend and a rejection and a trend, and then the exhaustion of that trend. So definitely profitable opportunity here on the daily time frame. Difficult to capture this value on the daily time frame right here. But on the hourly, definitely opportunity there. All right, so on the daily time frame, we've got a very beautiful triple bottom off the lower boundary over value area. We've got a beautiful pump, price breaking above our current value area level of resistance. So again, this all, you know, the strength of this is quite nice. We do need to be very cautious about kind of the prime strategy here, which would be the reversal in price getting overextended above the value area, moving down. Now, I will say that if Bitcoin and Ethereum move on the low volatility that they have and altcoins continue to perform well, perhaps things can do well. So let's go down to the 45-minute time frame and see what we got going on here. Okay, 45-minute time frame. Again, we can see this nice, beautiful breakout, multiple three white soldiers candle formation above the value area. Definitely a trending long. Price pulls back down to the value area, upper range boundary. Beautiful pullback entry, capturing this movement right here. So now we're approaching the previous high. You definitely don't want to be typically taking along here just from a statistical fashion. I don't care if price pumps up another 50%. You just typically don't want to buy the high. And this is literally buying the top right now. So let's move into, let's go look at this on Coinalyze and see who's in control right now. 30-minute time frame. Ooh, yeah, this is not super fantastic. Okay, 30-minute time frame. We can see this huge, big increase in open interest as price pumps. It moves up. It goes up here. The open interest is still rising. It goes up. It goes down. There's that pullback to the upper value area that we just looked at over on this chart. Making sure you don't miss that. Bing, that's that part right there. And bing, that's that part right there. And notice that right around here, actually here, look what happens. More selling than buying, okay? As open interest increases, more shorts are applying positions than longs. And on this recent pump, there has been almost no increase in open interest. This is not good. This is not good, Scotty. Cumulative volume delta dropping. Funding very positive. I would like to see it flip negative. Short liquidations. Oh, dear Lord. We go short. We go short. We go short. If get stopped out, we do not do anything. We just feel bad about it. That's it. We just go short. First, we calculate the risk. Let's see here. How much liquidity is in the books? Quite a bit. Dun, 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 dun. Ah, there it is. Point 1126. We do a little calculator math to determine position size because we ordered in quantity and not by value on Bybit because yeah, for reasons 0.1095 yeah, 280,000. Okay, we set a few. We open up a little bit market. Yeah, we open up a little bit market. Oh, I moved it a little bit. We open up a little bit market. We set the rest at limit orders because this quite large position size. And I just told you about the story from the other night. From last night, not the other night. Although that was the other night. There are other nights. So I've been told. All right, now that we have initial position, we go to 3 commas to automate the rest of trades. So I do not have to watch the chart. We use the smart buy function. There we go. That looks about right. 1051. That looks about right. Take half off at 1051. And we'll set what is this? 1020? Yeah, I don't think it probably will move down there if but we'll just that's what we'll do. And stop loss 1126. Okay, trades created. Sorry. Oh, jeez. Woo! All right, let's close out Friday with a good W, guys. Yes, they do. They repaint because it is active bar. It is active bar. If you do not want repaint, you just simply wait for bar close because you should be waiting for bar to close anyways on trade. It is okay. You can hard code them in the settings. It's very easy. And then you wait for bar to close. You use replay value to lock said values in because now no longer market is moving. Boom, 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 boom. Very easy. It is a feature, not the bug. Are we still in replay mode? No. Okay. The price is still moving. Price is moving toward my liquidation zone. Okay. Please, God, not me. All right. Anyways. Moving on. Moving on. You guys are great. 419. A few minutes left. So again, the other opportunities there that we saw. Ding, ding, ding. Crow. You know, one of my long-term holds. I don't really trade Crow. I have traded it, but yeah, Crow's done well by me. Basically, I have Netflix free for life. AP in the chat. What's going on, my brother? How you doing today? All right. We're gonna start moving toward the conclusion by looking at our what's up. We're gonna happy Friday, man. We're gonna move toward when we trade in rubles, my friend. Yes, it's very nice. I didn't know I was an expat, huh? No. Let's give a quick summary here of our strong and oversold tokens. So I have my screener set up. We monitor oversold MVRV ratios. So this is technical analysis and this on-chain analysis. Really, we're looking at market value to realized value of the coin. So based on circulating supply and market capitalization and what the price is, we can identify something that is oversold with a little bit more reliability than your relative strength index, for example. And strong, meaning lots of on-chain activity and demand, large transaction volumes on-chain, i.e. transactions that are have a lot of USD value are occurring on-chain, a lot of daily active addresses or a rise in daily active addresses. All these metrics are good. And again, Ethereum and Polygon, both on this list as of the last few days. Hex has been on this list for quite a while, as has Trust Wallet Token. BitGert's been on here for a while. And of course, Bone Shiba Swap, which again, took a position on that. Shout outs to AP. Took a little profits. Wasn't huge, but again, Bone Shiba Swap strong and oversold. And yes, that's all I'll say about that. Lido Staked Ethereum and Synthetics on Optimism also on this list. So my recommendations with the assets on this list, and what I always do is these are typically the assets that I will look at for positional trades from a reversal standpoint. So this is where I like to go. I like to get this list and I like to look at these on the weekly time frame. Ideally, I like to do all this on Sunday. I do review this every day just to see what kind of I can expect on Sunday. But Sunday evening when the weekly candle closes, that's when I like to go in and I do my kind of weekly scan. I do my weekly scan on the weekly charts and I get an idea of what I should be interested in picking up potentially for a positional trade at a significant critical level of support or resistance. Hold on a second. I'm trying to hit. There we go. All right. Yeah. So for example, Hex. Okay. We take this off. All right. So again, here's the weekly chart of Hex. As you can see, I've drawn out my support and resistance lines. My strategy or my process for drawing out support and resistance lines is relatively easy. AJI, I actually, yes, I do. Yeah, that's actually, I just noticed that I don't have my ring or my wristwatch on. Normally I do wear a watch, but yeah, I've got some cool ones, man. A lot of them just have sentimental value to me. I try not to spend too much money on them. I got a couple expensive ones, I guess, but yeah, soon we have ruble tether when dollar winter come. Yes, we do. It'd be a very good thing. It'd be a terrible thing, maybe. Anyways, my strategy or my process for support and resistance on a time frame like this is I just take my cursor and I start at the beginning of the chart. Oh, sorry, you guys can't see me very well. I was relaxing there. It's Friday, sorry. And then you just simply move your cursor along the chart until you reach a high or a low, right? As you can see here, the market turns around. And then I'll just look left and right. And I will see if that same horizontal level intersects with another high or another low. And if we look over, we can see it intersects with this pullback low. So there's a level. And then we'll go up here. Okay, we've got a double tap here, and we've got another tap on that line here. Okay, coming up here. All right, we've got a tap here. We've got a tap here. We got, and then sometimes you'll have a situation like this where we clearly have a zone of demand here because we've got prices reversing here, prices reversing here, pricing reversing here. So instead of like trying to figure out how to fudge the best line, you just go for the best fit. These are zones. Price is never going to turn around exactly at that area. That's not how support and resistance works. Support and resistance gives you a zone in which you should look to take action based on the actions of others. You never want to be the first of the party. You never want to be the last of the party. You want to be fashionably late, but early enough before the herd. Yeah, so Hex is definitely in its very low value area. Again, you know, you can have your opinion about Hex. You know, certainly I don't think, you know, I had this long conversation yesterday with one of the members. Like, I don't think it's a fantastic investment. You know, like for the long run, from a fundamental standpoint, like, you know, this whole CD thing and bonding process, like, don't get me wrong, like, I don't want any of the Hex army to come in here and hate on me. But I mean, there's literally nothing different about Hex than Curve, for example, except Curve has an AMM and liquidity pools. You know, Hex is an inflationary token, so it prints new Hex and that dilutes the value of current Hex holders, and that works really well for a short period of time, and then it doesn't. Stop it, man. Yeah. I mean, maybe, listen, but unlikely. You know, to me, and I'm just being very honest about this, as it is with many crypto tokens, like the value and the investment opportunity is in the narrative and the bull market and the bull market rush, right? So, you know, the Hex has a strong community, although to be fair, EOS has a strong community, and it hasn't done anything, you know, price-wise for a while. Not saying it won't, but you know, you need more than community to make price go up in a very significant way, as we can see on this chart. You need fresh money coming in. That's just how prices go up. So, and we'll see. You know, listen, like, the cool thing about crypto is that this is the grand majority of these things are open source, available to change, community controlled. And you know, it's really cool to see where things can work. It's not, you know, and also from a kind of community perspective too, it's not always all about the price. I mean, often, you know, a lot of individuals come in and care about things because they want it to make them wealthy or they want their investments to do well. But, you know, if a cryptocurrency solves a real technological problem or helps people, then I'm all for that. And yeah, that's right. Low liquidity pools, fresh money, baby. So anyways, with that being said, Hex is approaching the zone of initial investor buy-in down here in the lower tier. So again, the fact that it's strong and oversold, a lot of strong on-chain demand. Pulse Chain Poppy points out a good point. A lot of on-chain activity, for example, on the ETHW network. It's the only thing that's working over there, he says. So strong community, strong demand from that community. So can we see a lot of absorption right here? Either way you want to look at it, Hex is definitely cheap right now and a lot of on-chain activity. So we'll see what comes from Hex right now. But again, taking a couple punts for the long term as we descend lower and lower into the bear market is the way to do it. Are you going to be right with every pick? No, but if you try to make, you just do your best, man. You make calculated picks and you roll the casino, you roll the casino dice. Okay. Other strong and oversolds are, of course, Ethereum, and Dogecoin was on here for quite a while. So and so is Shiba Inu. So that it's recently off. All right, exchange inflow anomalies. These are coins that you typically want to sell if you have them, because things only show up on this screener if there's been a 300% increase in deposits to exchanges, inflows to exchanges. And when you have a big inflow like that to exchanges, they're not going on there to buy. You send cryptos to exchanges to sell. Axie Infinity, watch out. Huobi token, 0x Serum, Stasis Euros, Injective Protocol, INJ, Reef, Dent, Cartesi, Chromia, Coin98, Quark Chain, NKN, Alien Worlds, My Neighbor Alice. And then finally, the assets on this screener require a further detailed look. You have to identify whether the opportunity is buying or selling. It's just looking for big changes in activity on-chain and off-chain, exchange and on-chain. Trust USD, not obviously a tradable asset, but yeah, you know what I mean. Zenfin, Constitution DAO, Dusk Network. Dusk has actually been a very nice asset to trade, so check that one out. Enzyme was previously called Melon. BZX Protocol, who just got sued by the CFTC. Gods Unchained. Sentinel Protocol, Map Protocol, Assemble Protocol, All Sports, D-Race, Boring DAO, Revolution, Populi, and BitTrueCoin. So smaller coins, except for Mzine, Dusk, EZX. Those are larger protocols. Definitely worth a second look here. But yeah, that's about it. That's about it on the screeners today. Let's see here. Final thoughts. I was going to share that with you, but I shan't. We've got better time for better things. Let's see here. Reminder for those who did not see, we have added a ton of coursework to our online trading academy. We've even added this nice drop down since we have so many courses now. And we will be populating this with all of our historical content and new content moving forward. So again, premium member onboarding, pathways to profit, risk management, technical analysis, advanced trading, and advanced technical analysis. We are going to be adding in, as we get to processing the data, all of our content on building strategy back testers, as well as your own indicators in Pine, and our secondary modified approach to pathways to profit, which we went over in the mentoring sessions all the way back in 2020. So definitely check that out. Link down in the description. Did you know that most luxury watch boutiques will take Bitcoin or crypto? Smart people. You know what I mean? Long-term assets. Talking about this bear market in luxury watches, though, I'll tell you what. Never going to get that money back from my Breitling. Any hoosers, with that being said, thank you guys so much for joining me for another Friday edition of the Breaking Bitcoin Market Update. You guys have been wonderful. Thank you for all the support. Thank you for the comments. And speaking of comments, oh, dear listener, let me not miss GBU Wally, the only commenter on yesterday's video, breaking my heart. 2 comments. But he said, such good macro insight, and I probably missed why the change from noon. Thank you, Wally, for your continued support. The answer to your question, it just lets me get more done during the day. It used to be when I had the show at noon, I would kind of try to rush everything prior to the noon show because it takes me a couple hours to prepare material and kind of get my thoughts together. And when I do the show toward the end of the afternoon, I've already done all my day trading. I've been able to devote my time to the premium trading group or to clients if I'm doing one-on-ones, which is normally how I spend a lot of my time nowadays, building algorithms, building out new products and services. Because to do those things, to be creative, to write code or strategies or to trade itself or to write new content, you have to be focused. And when I know that I only have like an hour to do this before I have to start preparing for the show in the mornings, it made me very unproductive. And it was a big source of frustration and anxiety for me. So now that I've moved the show to the end of the day, the end of my work day, I've got everything done. I do the show. I've got all my thoughts from everything that I did today. So I've generally got a lot of content to talk about or things that are on my mind. So there's never a dull moment, hopefully. And then when I'm done with the show, I just log off, double check my emails and Discord messages and go on with my life. You know what I mean? So anyways, good question. And if you guys would like your comment featured on the air, make sure to leave a comment down below. And the comments that we do like are questions, comments, concerns, sarcastic remarks, hot stock tips, or death threats. We take them all. We read them all. You kill them. We grill them. All right, ladies and gentlemen, we will be back on Monday with another episode of the Breaking Bitcoin Market Update. Please don't dump the market while I'm gone for the weekend, although I will be here, of course. And as always, if you guys have any questions, feel free to join our Discord, link down in the description, and links to everything you could possibly want. Smash the like button, give us a follow, and we'll see you on Monday, guys. Cheers. Ha! Later, guys. guys.